Gas Station Business 101 podcast. I'm your host, Shabir Hussain, and this is episode number 18.
Welcome to the one and only Gas Station Business 101 podcast, where you can learn all the secrets about how to start and operate a gas station business successfully and make money. This podcast is brought to you by the good folks at CSB Academy Publishing Company. And now, here is your host, Shabir Hussain.
Hello there. Welcome to episode number 18. But first, let me apologize to those of you that have been waiting for my episodes, and I have been slow to produce episodes in especially last 3 weeks, where I should have had at least one more episode published by now. But something came up in about 3 weeks ago. We had an opportunity to acquire a station, a business, which we have, and we've been working day and night to rectify some of the situation at that station. And I will be happy to share the details with you as far as the sales data and what improvement we made and what kind of results we are seeing. But I will wait another month or so before I share the data, because it would be premature for me to share that data, because we have to wait and see if some of these datas are longer lasting or not, or if it's something just here for a day or two and then it will go away. So any changes that we make to our business, we have to see if they sustain for a longer time. If they do sustain, that's when you see results, and you can publish that results or share that results because they're longer lasting. So if you make some change and it goes away, the benefit, I should say, if the benefit goes away in about 2 to 3 days or a week, then it was a short-term benefit and it's not worth sharing with you, because anything I share here, I would want you to try it. And anything I want you to try, I would want you to enjoy that result for time to come. So if it is something for just a week or a month, it's not worth sharing. Now, with further ado, the topic of today is Basic Bookkeeping 101. I have talked enough about how to improve your business, how to generate more profit, how to add mini businesses to your business, and all of that other stuff. We have not talked about the basic bookkeeping or the numbers. I mean, you can sell merchandise all day long and make good money, but without a good bookkeeping system, you will never know how much money you're making or how much money you're losing, for that matter. So it is important that we understand the importance of bookkeeping. And today, I wanted to discuss the basic bookkeeping 101. I'm not going to get too details into it, but I want you to understand the basics of bookkeeping and how you can get it done even if you do not have any idea what bookkeeping is all about. And also, I want to touch on how to calculate net profit, the take-home money, so to speak, and how to figure out your break-even point. I know we touched on it in a previous episode very briefly, but since this is very relevant to this bookkeeping episode, I want to touch on that once again and explain how to figure out what your net profit is in your business, or how to calculate that, or loss for that matter, God forbid, and how to figure out your break-even point. And at a later episode, I will get into more in depth about gas station business software. There are many software companies out there that do a total gas station business solution. They do item level inventory or department level inventory, where you use scanners to scan products in and you scan product out. That way you can keep track of every item, every SKU or SKU is tracked. So at any given moment, you can tell if you're missing 2 packs of Marlboro Light box or 2 Snicker bar candy bars. And that is an ideal situation. If you can do item level inventory and track that, that is the best thing you can do for your business. A lot of the larger corporations, for example, your 7-Elevens, your Circle K's, and many other corporate stores usually practices item level inventory. It requires manpower, it requires money because those softwares are not cheap. And then you have to use scanners. Also, remember that when vendors come through your door, you have to scan each and every product in. But nowadays, things have gotten a little easier. Some of the vendors offer some electronic invoicing where they send it to you via email or some type of transfer via online where it gets into your software, the software that you use. It understands and reads that invoice so you don't have to manually enter it. But again, those are the topic for another day. I just wanted you to understand that the basic bookkeeping we're going to talk about today is for somebody who just has one store, doesn't have extra money to invest on those fancy software, and wants to do it the traditional way, the more common way where we enter data or we write it down in a ledger book, and then at the end of the month we calculate. So I'm going to get down to the very basics of it. And I'm sure some of you that are already in this business may have a much better way to do it, but I will start off with somebody in mind that has no idea how to operate a gas station business, and once they get into this business, how they can do bookkeeping in a very simple fashion, where if you do not have business or accounting background, you will still understand because it's the basic numbers. We're going to do subtract and add, basically, nothing else. So just one more time, the software that I was talking about earlier, that we will be having an episode just on those gas station software, the fancy ones. And there is one called Petrosoft. And I have used it once briefly, but I'm still taking some more time because there are a few other companies that are very well known nowadays in the market. And I would like to test at least 3 or 4 of these software before I can come up and tell you which one has what benefit and which one has what shortcomings. So in a future episode, I will address the full gas station management software that comes with bookkeeping, accounting, and all the managerial tasks. And we will touch on that at a later episode. But for today's episode, as I said, it's going to be basic bookkeeping 101. So if you have no idea what bookkeeping is, please listen. If you know what bookkeeping is, you still want to listen because there might be some things that I will discuss that can make your job or your time that you spend on bookkeeping might be easier. Now, when I started thinking about doing an episode on bookkeeping, first thing came to mind is a lot of gas station owners I know outsource the job bookkeeping. Means they have a local person that they know is a bookkeeper. So what they do is they hand everything over to that person or to that company, and they do bookkeeping for them, and they return some type of results at the end of the month, and they give it to their accountant and file taxes and whatnot. Basically, bookkeeping is where you keep track of what you sell versus what you buy and what your expenses are. And then those things can come into handy when you file your taxes, because when you file your yearly income taxes, your accountant has to know how much merchandise did you buy, how much did you sell it for. Remember, I used a term called COGS, cost of goods sold. And that's an accounting term, meaning if you bought, let's say, tobacco products for $1,000 and you sold them for $1,500. Now, your cost of goods sold is your cost of to buy that product. So your COGS, or cost of goods sold, is $1,000 because you paid $1,000 to buy those tobacco products and you sold it for $1,500. Anyway, so getting back to the point, the basics of bookkeeping is where you keep track of these 3 items. One is your sales. Next is your purchase. And third, your expenses. Two important reasons you need to keep track of this. One, you need to know how your business is doing. Number two, you're required by the government to track your profit, sales, loss, so you can file your taxes at the end of the year. Let's say your business, God forbid, lost money. Then if you didn't keep track of it, you may provide the false data or the wrong data and end up paying a lot of taxes. So it is vital that we keep track of these numbers, not only for taxes, because government requires us to file taxes, and when you put those numbers in your tax return, they have to be accurate. You can't just make up numbers, then you get into trouble. So by law, you have to keep track of the numbers. But more importantly, it's for your benefit to keep track of those numbers, because if you are having issues in certain part of your business, your bookkeeping will tell you that. And I will get into how in a minute. So as I said, there are three parts of bookkeeping. Even if you have no idea what bookkeeping is, just remember, any business has three parts. They sell products, so they have sales numbers. And then any business, if you're selling products, you're buying those products, right? So again, that COGS, cost of goods sold. So that means you're buying those goods. So those are your purchase numbers. And third, since you're operating a business, you have expenses. Your rent, your mortgage, your labor, your phone bill, anything you think of as an expense is a number that gets into your bookkeeping. So again, sales is number one that you need. Purchase numbers are the second vital thing that you need. And thirdly, expense numbers, expense data. These are the three things we need to keep track of. And that's why bookkeeping is so important. Okay, so in this segment, as I said, we're going to discuss bookkeeping. And I broke it down to 5 categories where we're going to discuss. The first one we already touched on, which is the basic to define bookkeeping and how and why it is vital for your business. As I just told you that it is required by the government, and more importantly, you need to know the numbers so you know how you're doing. And now the breakdown of 3, which is sales data, purchase data, and expense data. Number 3 would be, now we need to find out how to keep that data. Well, if you're looking at a bookkeeper 60 years ago, 50 years ago, even 20 years ago, when the computer wasn't as readily available, people use ledger books. You can buy those still in any office supply stores. These are ledger books, means they have tiny places where you put numbers. And you can have 20, 30 lines across or column and such and so on and so forth, where you can break down all your department sales, and then next page you you write down all your purchases and you add them up. Now it is much simpler to just do it on a computer. The way I do my bookkeeping is in-house. In every store, I have a computer and I install Microsoft Excel. The easiest thing, everybody knows how to use it. All you do is plug in those numbers. I set up a format where people just plug in numbers. Any managers can do it. Even if I teach an employee, they can do it. All you do is look at your daily sales and enter the numbers. So depending on your comfort level, you can do it manually, meaning by handwriting. You can handwrite all those numbers into a ledger book and add things at the end of the month and see how you're doing. Or you can do it on a computer in Microsoft Excel. Now, there are some bookkeeping softwares. There are many famous bookkeeping softwares, I should say. And you can pick one, but none of those software are designed specifically for gas station. And the reason I stress that point, that they're not designed for gas station, because in fuel, it's hard to calculate the profit, because you sell 3 grades of fuel and every grade profit margin is different. So anyway, you can customize some of those, and I haven't done one of those. So I'm sure some of you that are listening have already done it. And if you have, email me, tell me how you have done it. I need to learn from you because I have not tried that. But again, remember at the beginning of this episode, I said there are some gas station specific software that I will be discussing at a later time. Those are expensive softwares. You pay monthly subscription fees, but they do everything. They calculate everything. But again, we're not going to get into that high level discussion today. We're just going to do the basics. And again, I still practice that basic. I do it in every station we have, where we enter data in Microsoft Excel. So depending on your comfort level, you can choose to do it by hand, or you can do it in some kind of a spreadsheet. If you're not using Microsoft Excel, you can, I'm sure, if you're a Mac user, I'm sure there is a spreadsheet for Mac, or there are other spreadsheet program that you can download for free. So any one you use, as long as it's a spreadsheet, it will work just fine, because all we're gonna do is simple add and subtract. Now let me describe how I do bookkeeping in a typical gas station of ours. As I said, I use Microsoft Excel. So if you open the Microsoft Excel program in one of the stores, you will see the first tab says daily sales. And under that daily sales tab, if you open that tab, you will see the way our departments are set in a register. Let's say, take a look at one of your Z report. Z report is your daily closeout report, and it could be from any register. Every Z report breaks down the departments, and I put every column has that exact department starting from top to bottom. So let's say typically you will see most gas station Z report starts with cigarette, then tobacco, then drinks, and then grocery, beer, then wine, and then some people separate novelty, some people separate ice cream, some people separate coffee and fountain. Whichever way it is set in your register, I recommend you make those columns with those headings exactly same layout, one after the other. That way, when you're entering the data, you don't have to look back and forth. You go from top to the bottom. So let's say you have 10 departments or 8 departments or 6 departments, or however many you have, you write them down exactly the way your Z report says. And then on the very left-hand side, you have your dates. Let's say it's October 1st, and then it's Thursday, and then next one would be October 2nd, Friday, and so on and so forth. You go up to 31st. And then once you set up this book, you start adding those data. Every day when you come to your work, you take your Z report, you enter how much cigarette you sold the previous day, how much beer you sold, and how much novelty, how much ice cream, how much fountain, and all of that. And at the end of that month, at the bottom, you can total that. Excel will total that for you. And you can just hit the help button on Excel. It will teach you, or you can even go to YouTube and it will show you how simple it is to add those data. And once you create that format, you can use it over and over in every month. Just copy paste. That way you don't have to remember the formula or anything else. Once you set up that format, and I think I can upload one for you on my website under resources, and you can download one. It will have the formula already in it, which is just the addition and subtract and whatnot. So you don't even have to do that. But all you have to do is set up your department the way you have set up in your register. So once you do that, your sales data are intact, meaning you have all your sales added in Excel for that 1 month. Now, the next tab in our station says purchases. And now what I do is I have similar departments just the way my register was set up. The departments were set up. So let's say for one station, I had cigarette, then tobacco, then drinks, and then beer, then wine, grocery, newspaper, ice cream, novelty, so on and so forth. When I go to my purchase tab, my departments will be set just that same way, meaning I can track department to department. So let's say when I go under the tab of purchase, and again, I'm going to have the dates on the left-hand side where it's going to say October 1st and Thursday and so on and so forth, I'm going to be entering only what I get from vendors. Let's say I bought cigarettes. My grocery company drops off cigarettes every Thursday. So every Thursday, I will write, okay, I bought $7,000 worth of cigarettes, $6,000 worth of cigarettes in 1 week. Next week, I bought $7,600 worth of cigarettes. So you're not going to have data for every day. You're going to have every department you will see. You may be entering 4 to 5 times because most vendors come once a week. Some of your vendors may come twice a week, but that's rare. So most of these have at least 4 to 5 entries, maybe 8 at the most. Now, what you do is at the end of, let's say, October is the month we pick, and you entered all your data for October sales, and then you finished entering all the data for October purchases. So now you're looking at, okay, I sold $14,000 worth of beer on the month of August. How much did I buy? So you go in and you take a look and you said, okay, I bought $11,000 worth of beer. So basically, what you did is your gross profit is $4,000 or $3,000, depending on how much you sold and bought. It gives you a very rough indication if you are losing money or if you're making some money. So as I said, if you see you sold $14,000 worth of beer and you bought $11,000 worth of beer, basically that tells you hopefully your inventory remaining the same, you made $3,000. But it's not that simple. But I'm not going to get into the inventory part right now. I'm just going to show you how to do basic bookkeeping. Similarly, all the other departments, you will enter those data and you will compare it to your sales for the same department. For example, soda. Let's say you bought $9,000 worth of soda from Pepsi, Coke, and your grocery company. There are some things you buy from grocery company that you still ring up under soda, I'm sure. There are drinks, many types of drinks that are carbonated and whatnot. And I'm sure you ring it up under soda. If not, you need to be careful. If you do not ring that up under soda, make sure when you're entering your grocery invoice to your purchases, do not add that type of drinks to the soda. If you ring it up under grocery, then that thing needs to go under grocery. That way your bookkeeping will stay straight and give you more accurate picture of your numbers and your business. Now, so once you do these 2 tabs, which is purchase versus sales, it gives you a very basic idea how things are going in your store. Now, I have seen where we bought cigarettes for $30,000 when our sales were $28,000. Now, don't panic. Don't think that it was a huge loss because people stole a lot of money from us. Well, there was some theft, but also we did not at one point calculate that there are rebates that come directly from Philip Morris for Marlboro and other cigarette products that they manufacture, and then again from R.J. Reynolds and from Lorillard. So there are kickbacks that they send off, or the buy down, I should say. There are some kickbacks and there are mostly buy downs. For example, at this moment as we're speaking, it may not be in the future, but Philip Morris provides $10.50 each carton of Marlboro Special Blend. I don't know how long it will remain that way, but if you're listening to it in a couple of years down the road and you may say, no, I don't see that. I don't see $10.50. It may not be there. But again, that's not all your profit. What they want you to do is they want you to knock the price down by $10.50. So when you sell it to the consumer, they will get that benefit, not you. You're not making that $10.50. But again, when they're giving you the money, they send it to you via check. So again, understand this. You buy it, let's say, at $50 a carton. So when your grocery company drops you off those cigarettes and you write them a check, you're writing them a check for that $50 a carton. Month and a half later, Philip Morris will send you a check, or they will transfer electronically some funds where they will send you that $10.50 a carton that they wanted you to discount to the customers. So basically what's going on is, let's say you bought 100 cartons each week and you discounted that by $10.50. So essentially, you discounted $1,000 that week, or $1,050 that week, just from Philip Morris one type of cigarettes. So if you sold 400 cartons of that cigarette, that's quite a bit of money. So again, when you do these numbers just for cigarettes, it may look a little bit off that you're losing money. But again, you have to consider that you're getting that kickback. So you need to add those check amounts to your sales number to make it look more justifiable. The reason I mention this because I know once you do these numbers, you may jump up and down saying you lost money on cigarettes, but make sure you add your rebate dollars to your sales. That way, the numbers will look more natural. If not, you're going to start thinking, hey, people are stealing from me and they're robbing me blind. So that may not be the case, but again, only on cigarette, it may look a little bit odd, but rest of the departments will look natural unless you have severe theft. So this is a indication how you're doing, but again, not a 100% accurate picture. But we're going to get to a more accurate picture once we have the third tab filled out, which is your expenses. You need to know your expenses, and you need to enter those on a spreadsheet on the third tab where you can say how much rent you paid and how much utility bills you paid and how much employee cost you have. And all of those can go under that tab where it says expenses. So now we have our sales data, we have our purchase data, and we have our expenses. Now there is a fourth tab that I did not mention before, but this is your money tab. I call it the accounts tab. The accounts tab means your business receives fund or when people buy merchandise or gasoline, they pay in so many various forms. Not everybody pays cash, not everybody pays credit card. There are various types of payments that you receive, and you need to keep track of those. So accounts is something, again, let me go back to something more similar to you. Shift reports. I'm sure if you are in this business or if you're starting out, I'm sure you have seen shift reports. Every employee fills one out for every shift where it says how much they sold versus how much they collect. And when they say how much they collected, I'm sure there are places where they put, I have this much cash, this much credit card, and this much in checks, this much in other forms of payments. And I will get to it in a minute. And then they add those two columns and see if there is a difference. So one is should have, one is actually have. So on the left hand side, they have how much they sold. So it's how much they should have. Let's say they sold $2,000 worth of gasoline and $1,000 worth of merchandise. So they should have $3,000. On the right hand column, it shows actually what they have collected. And then they write down, I have $900 worth of cash, I have $1,700 or $500 worth of credit cards and $700 worth of checks and so on and so forth. Once you add the right column and match it with the left column, whatever the difference is, if it's a positive difference, that means they're over. If it's a negative, they're short. So that is the same thing we're going to do for your basic bookkeeping, where we're going to keep track of the money that's coming to the store. And this is important because nowadays 60% of our business is done via credit cards. Now, how do we track credit cards? You take $3,000, $4,000, $5,000 worth of credit card a day. In a typical gas station, you may take more or less depending on where you are and what type of business. But a typical branded gas station takes anywhere from $4,000 to $6,000 worth of credit cards. Now, it is vital for you to keep track of that credit card. So in this tab, we're going to keep track of that, because how do you know that all these 200 cardholders that came to your store yesterday and charged, all of them went through to your processor and that they are crediting your account for the same amount of money? So if not, you're missing a whole chunk of, let's say you're missing a batch. How would you know that you're missing a batch if you don't keep track of it? When I say a batch, credit cards are processed in a batch. Let's say once your system has 50 credit cards transactions, it will batch automatically. It will gather up all 50 transactions and put it under a batch or under an umbrella and say this, and they will call that batch a number. Let's say they will say this is batch number 809, and they will send it to their respective settlers, means to a bank that your gas station is networked with. Let's say you are a Shell branded, so they will send that to a Shell Financial Services, and they will settle that, and they will send you money the next day to you or to your jobber. And they will say batch number 809 total was $1,700 or something similar to that, whatever amount that is. Now, only problem you're gonna run into is most of these gasoline companies, when they settle a batch, they take their percentage out. Means there is a processing fee. It's typically anywhere from 1.75% to 2.25%. And there are some cards that are higher, even 3%. But typically speaking, it's 1.75 to 2.25. So once, let's say, $1,000 batch, when you settle, you're not going to get $1,000. You're going to get less, 2.5% less, or maybe 2% less. So that is $22 less than $1,000. So let's say you settled a batch for $1,000 and they're going to take $20 off. So you're going to get $980. So when you try to match, it's not going to match because it's not apple to apple. It's apple to orange pretty much. But as long as you take that percentage into account, you will know that this is matching. So this is important for you to track. And that is my point here, that the cash that you're taking in your business, how much of it is going to the bank, how much of it is you're paying to the vendors and whatnot. So there has to be a way to track this money. That is very important. So I usually create one more tab, like I said, and it's called accounts. And the way I set it up, again, I set up day by day. So I still do, on the left-hand side, it will say October 1st, Thursday, and so on and so forth. And on the right-hand side, one column at a time, it will say cash. Then it will say credit card. Then it will say checks. Then it will say house accounts, if you have any. And again, let me explain what house accounts are. There might be one or two companies, reputable companies that come to you. For example, we have 2 accounts in one of the stores. One is from a very prominent florist in our area that says, hey, I'll send my vans to fill up, and once a week we'll settle with you and pay you whatever gas they buy. So we usually print out 2 receipts and put the van number on the receipt, and the driver signs it. And then at the end of the week, the owner comes in and writes a check for those tickets, and we hand them a copy of that ticket. And another account we have is with a small car dealership. They fuel all their cars at our store, and they usually send us a PO number, which is a purchase order number. And we keep track of that. When we again print 2 receipts and have the driver sign it and take 1 copy with them, so he can turn that into their accounting office, and we keep 1. So at the end of the week, we again tally that up and bill them, and they send us a check. So we have a tab for house accounts. Then there are other forms of payments like EBT, or electronic benefit transaction, which is the other name for it is food stamp. It used to be called food stamp. It's not anymore. It's called EBT. But anyway, so if you accept those, then you will have a column for that, because again, EBT has to be tracked because it is a non-tax sales. So for tax purposes, it is important for you to track your EBT sales because you have to file taxes. And these are non-tax, means anytime you sell anything on EBT, you cannot charge sales tax on it. So it is important for you to track it separately. And again, this is a form of tender, means it's a form of payment that you have taken in your store. Just like you have taken credit cards, since you have a separate tab for credit cards, EBT should be separated as well. So once you do all of these, then you do total. So let's say for October 1st, between credit cards, cash, EBT, and checks and everything else, you have $1,900. Now, how much of that went to the bank? Cash part of it, right? But again, you have paid some vendors. So let's say your chips guy came in and you paid him $150 cash. So again, your cash, total cash that was taken at your business is not going to the bank because some of it is paid to the vendor. So this is where you keep track of what has gone to the bank and what has gone to the credit card company, and reconcile that at the end of the month with your bank statement. Say, okay, I sent 30 or 24 deposits last month, and according to my books, it says I sent $29,000 to them. Take a look at your bank statement. See if that matches. So these are the things that you can do. And again, your oil company will send you credit card settlement every day or every other day. Most credit card companies or most branded gasoline companies send you settlement every day, other than weekends, of course. And what you do is you match batch after batch, batch after batch. Just glance through them and make sure you're not missing a batch, because if you miss a batch, it can cost you $1,000. Most of the batches are usually anywhere from $670 to about $1,200. So if you're missing a batch every, let's say once a week, you miss one batch, $3,000 to $5,000 can go out the window without you even knowing it. So it is important for you to track that batch, or you can assign somebody to an employee, teach them how to match that. And all they have to do is match those credit card batches. See, there is no settlement set total at the end of the month. Not very many companies provide that. So if you keep a track of it, you will have the total and you can match it. The only reason I did not outsource my bookkeeping, because gas station bookkeeping is little different than any other type of business. No other retail business takes this many sort of payments, and no other businesses has this many departments with this many variations, and no other business, retail business, has 3 grades of gasoline where you make 3 different types of profit. So it is hard for a conventional bookkeeper to understand all that and paint the true picture. So once you are in this business, you know this, you can draw the real picture and you can see it very clearly if you do it on your own. And not to mention, you save the bookkeeping money. And your sales is a sensitive data, especially for gas station business. Your competitors always want to know how much you're doing. So it is a good idea to keep that to yourself if you do your own bookkeeping. Now let's talk about how to calculate net profit. And remember, all this time that I've been talking about the Excel worksheet and how it looks, what the columns are and whatnot, I know it's hard to listen and visualize. So what I recommend you do is, once you are in front of a computer, go to my website, go under resources and download one of these Excel sheets just to see what I'm talking about. It will give you a very good visual idea what I'm talking about. And that way you will understand more clearly all these things that we are talking about and we will be talking about. Now, to calculate net profit, what we need to do is we need to get these numbers, subtract and deduct and play with them. Just simply play with those numbers. The way we're going to do it is this. You have your sales. Let's say, again, month of October. Let's say you sold $100,000 worth of merchandise. So you go back and see how much you purchased for that month. Let's say you bought $70,000 worth of merchandise. And again, I'm not talking about gasoline. I'm just talking about your inside merchandise. So now you have $30,000 worth of gross profit sitting there. So what you do is you write that down. And again, I will share another format in Excel where you can calculate your monthly profit. And it is a very simple one. And I already added all the formulas. All you do is plug in the numbers and it will spit out how much profit you made. But to understand the concept of it is very simple. You take your purchase and subtract that from the sales, you get your gross profit. Similarly, we go to the gasoline side of that sales tab and we see how much gasoline we bought versus how much we sold. But the most simplest way to figure out your gas profit every day is any day that you bought your fuel. Let's say your oil company dropped you off a load of fuel today. So you know the cost today. In that Excel sheet and under the purchase, I have a tab. Not a tab. I have a place where I put the cost. Any day I buy gasoline, I write down the cost until the next time I get fuel. So every day, let's say today my cost was $1.97. I also write down how much I'm selling it for that day. So let's say I'm selling it for $2.09. Then on the right hand side of that tab, it automatically calculates that I'm making 9 plus 3, 12 cents for that day every gallon I sell. So only thing changes every day is whenever I get a load of gasoline, I enter that cost again. And if I've gone down or up on prices, I will adjust it on that sales tab. So any changes of that will reflect on the profit. So at the end of the month, let's say I see that and then at the end of the month, I average my profit margin. So let's say for 10 days, I made 12 cents a gallon. Then the next 8 days, I made 9 cents a gallon. Then another 5 days, I made 20 cents a gallon. So in Excel, you can simply use a formula and create an average profit for that. So at the end of the month, I see that my average profit for each gallon was 14 cents for the month of October. And on the little left to that number, I see how many gallons I sold. Let's say I sold 100,000 gallons. So I simply multiply 100,000 times 14 cents, which is $14,000 is my gasoline profit. And similarly, you have numbers for your inside sales where you took your purchase minus your sales and you got 30,000. So let's say your gross profit is 40,000 in this case for month of October. Now you go to your expense tab and tally up all your expenses. You have your rent, your utilities, your even also make sure you add your credit card fees in this expense tab. So you have all your expenses, your labor cost and whatever and whatnot. And now your labor and everything else combined, all your expenses came to $25,000. So now what is your net profit? Your net profit is your gross profit minus your expense. That is your net profit, your take-home money. So what you do is you subtract 25,000 from that 40,000 gross profit and you get 15,000. So it is simple to figure out what your net profit is for that business. Next topic that I wanted to talk about is how to calculate a break-even point. To me, my break-even point is more important to figure out than anything else in the business. If you need to figure out just one thing about your business when it comes to numbers and bookkeeping and accounting, break-even point is the number you need to know by heart. And I'm sure you understand what break-even point is. Break-even point is where your business generates enough income to pay everything or everybody. All the expenses gets paid from the income of your business, but there is no leftover money for you to take. That means your business is running on a break-even. Means it's not losing a dollar, it's not making any dollar. To me, that is the most important number you need to know. Because once you know that number, your target would be to exceed that number by a huge margin. And then you can set up a goal to exceed that margin and that number, I should say. So once you know that number, you know you cannot do below that because then you will be losing money. So you'll always be trying different things to get over that benchmark, that barrier, that break even. Because anything, even if you sell $1 over your break even point, that is profit for you. So the best way to figure out your break even point, and I know we touched on it briefly before, and again, I'm going to touch on it, which is you add all your expenses. Like you have that expense tab, add all your expenses. So let's say your expense, again, we're going to take the same number as we spoke about earlier, which is your expenses are $25,000. But remember, here is a trick. That expense is based on a couple of things, based on some of the higher sales that you have done. So there are some credit card numbers or fees that are involved in it. So these are variable cost, meaning that cost is high because you sold so many things and so much dollar amount. If you didn't, it would have been lower. But I don't want you to be that picky. Just assume that it is $25,000. Once you know it is $25,000, that means your business has to make $25,000 to break even. So now you need to see how much sales you have to do to get to that $25,000. We know when you sold $100,000 of the product, you made $30,000. And when you sold 100,000 gallons, you made $14,000 from your fuel. But again, there might be a month where you sold 100,000 gallons, but you only made $4,000 because gas is a very volatile commodity and the price fluctuates every day. So we're going to again keep the gasoline out and we're just going to consider the inside or the merchandise sales. So let's say when you sold $100,000, you made 30. So if you sold $80,000 and your purchase was, let's say, $65,000, then how much gross profit was there? There was 65 to 80 is about $15,000. And again, let's take this scenario. You made $15,000 from inside merchandise. And let's say your gasoline profit remained the same and you still sold 100,000 gallons and you made $14,000. So in this case, you have 15 and 14, which is $29,000. So again, we're above break-even point. But what if your gasoline only brought you $10,000 profit? Meaning your average gas profit was 10 cents a gallon and at 100,000, you made $10,000. And in the case scenario where you only did $80,000 sales and your purchase was high and you bought $65,000 of the merchandise, so your gross profit was only $15,000 in this case from merchandise and $10,000 from gasoline, your net, not profit, but your gross profit was $25,000. But by now, we already know that your break-even point is at $25,000. So if that happens to your business, you will not make any money whatsoever. You will pay everybody, but at the end of the day, it will be zero. It will be completely a big zero for you. So you see that anything you sell above your break-even point. So only thing you can consider is, okay, so anytime I do over $80,000, that's my money. That means I get to take some money home. Anytime I make over 10 cents profit on a gallon of gas, I will get to take that money home. So see, that motivates you. So once you know your break-even point, you can set up various goals to exceed that number. And again, the numbers, the examples I gave you were not exactly accurate. When you sell $80,000 of the merchandise, your purchase should be much lower than $65,000. But it was a example just so you can understand the importance of it. You have to have break-even numbers. Like if I sell above $65,000 of the merchandise a month, I will make money. Or if I sell anything above anything above $50,000 of the merchandise and 50,000 gallons of gasoline, I will make profit. So it is a good idea to know your break-even. That way, you can always motivate yourself, you can motivate your employees and exceed that number more and more every month. Now, we're at the end of the show, but one important thing I want to mention today, I just want to answer not an email, but I want to mention an email that I received 2 weeks ago from an individual that did not sign his name. He wrote me an email from Wisconsin and asked me for some advice as far as a business that he's looking to buy, but there is a big competitor that is coming and opening a store close to him. And he asked me about some other questions that I'm not going to mention in this show because I want to keep his privacy intact. But the reason I want to mention his email, because he mentioned that while he's worried about his new competitor, he also finds comfort knowing that there is a law in Wisconsin that protects him. And without knowing what the law was, I gave him some advice on about how to find out and what to do and what not. I'm not going to get into that. But more importantly, the reason I want to mention this email, and I thank him, I don't know his name, so I can't thank you by name, but please accept my thanks, because once after I replied to your email, I found out about this law in Wisconsin, which is a fantastic law. And I'm not sure how many states have this, but this is from Wisconsin Department of Agriculture, Trade, and Consumer Protection. And this law clearly talks about unfair competitors if you're competing unfairly with big boys. And the name of this law is the Unfair Sales Act. And it clearly says, it talks about alcohol, tobacco, cigarettes, and everything else. But for gasoline, I want to read exactly what it says. State treats motor vehicle fuel separately. For retail sales of motor vehicle fuel, the definition of cost relies on the average posted terminal price and includes a 9.18% markup over this amount. Just imagine having this law in every state where no big boys can come next to you and sell below their cost. And again, if you're a small retailer, your cost may be a little bit higher than the guy at the big boy that has 1,000 stores and has a bigger buying power, can get it at a cheaper price because he may act as his own jobber, or they may act as their own jobber, and they get rebates from the oil companies because they buy so much volume. So in this case, nobody can sell below cost. And that is a huge comfort for anybody in gas station business. So again, I want to thank this person for opening my eyes so I learned about this law. So maybe we can advocate to have this law in every state. And I'm sure some of you may email me and say you have it in your state. I haven't checked into many other states, but I'm delighted to see this in Wisconsin. It is a great law and it protects small mom and pop shops and people like us. So again, it is a very good thing to have. So if you're in Wisconsin, I'm sure you enjoy the benefit of this law. And there are maybe other states that have this and they enjoy the benefit of that. But again, just having that law may not stop some retailers to disobey them and start selling below cost. But again, as long as there is a law, you can have it enforced by notifying the people that are enforcing that type of law. You can take pictures of that posted price sign and notify your local government and say, listen, they're breaking the law. So there will be actions taken against those people. But if there is no law, then we can't really do much. So again, we need to advocate to have this type of law in every state and every locality and every city. If you want to read more about this law in Wisconsin, I will have a link to it in my show notes. You can just click on it and it will take you there and you can read about it. Now, lastly, the book that I want to mention today is called Turn the Ship Around by David Marquet and Stephen Covey. This book is about how to turn followers into leaders. And the reason I want to mention this book is it is a great book, definitely. If not, I wouldn't mention it. The reason is every business owner is a leader. Because if you are a follower, most likely you can't have your own business or you won't be very successful at it. Because a good business requires a good leader. Because your employees, other vendors will look up to you as a leader because you are the decider for your business. So this book teaches you how to be that leader. And not everybody is born as a leader. And I'm certainly not or wasn't. So it takes some learning, it takes some practices and some skills that you have to acquire. And I think this is a good tool to have. And you may, if you are a leader, it's good. But if you can be a better and better leader, it's even better, right? So enjoy the book And again, I'll be back in a week with the new episode. Until then, take very good care of yourself and remember to work smart and not hard.
This has been the one and only Gas Station Business 101 podcast with your host, Shabir Hossain. This podcast was brought to you by CSB Academy Publishing Company. Be sure to join us next time as we share with you the secrets about how to start and operate a gas station business successfully and make money.